Latino Nation? My name is Tony Delgado, and welcome to Latino Wall Street Live here on the FinTech TV network. Here we're with my good friend, the man, the myth, the legend, Mr. Jorge Fajardo. George, thank you for being here, my friend.
Tony, thank you for having me. It's a pleasure.
So you're the founder of KPI Capital Partners. You've been in the real estate and investing world for over 20 years. We're here on the floor of the New York Stock Exchange celebrating Hispanic Heritage Month, bringing Hispanic leaders like you who got into finance and are kind of breaking stereotypes here to the mecca of capitalism, the birthplace of the stock market. I wanted to ask you, what inspired you to get into finance?
I mean, look, it's always been a dream of mine to be here. So first of all, thank you for providing me with the opportunity. Yeah, that's what I went to college for, finance. I graduated back in 2002 with a Bachelor of Finance from Florida State University, and I wanted to be a stockbroker. You know, once I got into it and I was going for my Series 7, I realized that I wanted to go in a different direction, and I got more into the banking side of it through real estate and lending. And back then, eventually, I became my own lender, and all the way from 2004 to 2002, I was table funding and selling off my loans in the secondary market, and I was doing great up to 2008 when the real estate market crashed. So I pivoted, went back into school, and got my law degree, and went down the legal route, actually helping people avoid foreclosures now. So I was fighting the banks. Before I was a lender and I was part of the banking system, and then I went to fighting the banks. But finance was always in my heart, and I always wanted to be in private equity, venture capital. And in 2015, I made the leap. I went over and I started the company, which our parent company is Keystone Property Investments. That's where the KPI comes from. And now we have multiple verticals under the KPI moniker. And I started the company with $1,000. I studied a lot of different strategies, creative financing strategies, creative funding strategies, because what a lot of people, what holds them back from real estate is that they think it takes a lot of money or credit to really start buying properties, because that's a traditional way of doing it. And there's a lot of other strategies that don't require it. You can buy real estate without credit, without money. And it sounds impossible, it sounds unrealistic, but like I said, I did it. The very first deal I did, I put $1,000 deposit on a contract on a property. I found someone to buy that contract from me, right? I made a $20,000 spread on that contract. So at closing, I literally just transferred the contract to the person that ended up buying the actual property and having the money to fix it up and everything else. And I walked away with $20,000 in my pocket, and it all took 3 weeks. So from $1,000 to $20,000. Once I understood that strategy, how to do it the right way, legally, ethically, and the correct way, I just kept multiplying that process. And we started to grow. And then from there, as I started to implement other strategies, I started strategy stacking. And now here we are. One of our main strategies right now is multifamily syndications. And that's how I was able to grow from $1,000 to now a 9-figure portfolio that's due to more than double in the next 5 years using all these different strategies.
Wow, so you're really breaking the stereotype that it takes money to make money, right? You were able to leverage and use your ingenuity and your grit and your ambition to really build this portfolio in this real estate empire. Right?
Yeah, well, there's a will, there's a way, and again, to me, education is everything, and I could have very easily said, well, I'm an attorney, I'm a finance guy, I was an ex-lender, I know everything there is to know about real estate, but I didn't do that. I, very humbly and just, decided to go back and continue studying and learning different strategies.
And where did you learn these strategies? So you didn't learn them in school, you didn't learn them in college?
No, definitely not. That's the thing, I sought out, like-minded people, right, and this is something that I always talk about, which is if you want to learn something and you know that it's let's say with a typical a particular strategy, like find the people that are applying this strategy, that are being successful with it, and then that's how you learn. You go and you learn from these people that are doing what you want to do or have arrived where you want to go, right? And that's the most important thing, is surrounding yourself and aligning yourself with these like-minded people, and that's what I did. And to this day I still do that. And from, you go from one room to the next, you can see yourself elevating into these different rooms, these different conversations that you're having with different people that are where you want to go. And that's the main thing, is really surround yourself with that.
Yeah, I love that. I want to switch gears real quick to inflation and the economy, right? We've seen historic record-breaking amounts of inflation, specifically since COVID. We've seen money printing like something that we've never seen in the history of the U.S. dollar. Some people are speculating that the U.S. dollar is going to crash or collapse. Why do you think that investing into assets like real estate, like stocks, like cryptocurrency, why is it important for people to diversify out of cash?
Yeah, I mean, look, we've definitely seen a little what I would say fiscal irresponsibility by the previous administration. So I mean, back to the COVID days, but just in general, I mean, going back to the 70s when we transferred from the gold standard over to a fiat currency, you know, the dollar at this point is just really blips on a screen, right?
It's speculative.
And it's speculative,
yeah,
exactly. And so, you know, when it comes to, at least in my field with real estate, you know, we're investing in a hard asset, but now we're doing it in a way where we're actually giving other people, very similar to how you would invest in an index fund or a mutual fund where it's backed by a series of companies. What we're doing is we'll take, I'll give you an example. Right now we're buying a 324 unit multifamily property. It's a $20 million acquisition. We're putting in our own capital, we're leveraging the debt, and so the equity component, we're basically fractionalizing that into shares, and we're selling off the shares. So that's how people are able to come and invest with us. So now they own a share of an actual hard asset, which in our view, you know, housing is, especially multifamily housing, at the level that we're buying it, where, you know, we have very strategic strategies of what type of property to buy, what we call, you know, secondary, tertiary markets within, you know, a C to a B class, where we can where we see a growth there, we can transition it into a higher value. What that entails is that what we see it is basically recession-proof. I'll tell you why. Because in a good market, right, where people are moving out of, you know, nice apartment housing, they go, what do they want to do? They want to achieve the American dream, they buy a home, they get a mortgage, now they buy a home. The people that are maybe in, let's say, low-income housing or workforce housing, they want to ascend to this middle class, class B, you know, B plus
upward
housing,
mobility,
upward mobility. So now they're coming into, and this is where we're positioned, right in the middle. Now, what happens in a down market, in a recession? And, you know, we see what happened in 2008 where all these homes were going to foreclosure. Those people still need housing. They need a place to live. And maybe they just take one step backwards, and now they're moving into a very nice, you know, class B, nice amenities, you know, multifamily housing, where maybe perhaps some other people may go back down into subsidized housing, Section 8, or, you know, income, you know, workforce.
So you're positioning yourself right in the middle. You have upper class people, if they take a step down, they're going to end up there, and if you have lower class people with upward mobility, they take a step up, and they're
there. So we're always there. We're catching both sides of it, so we do consider that recession-proof. The most important part of it, though, is buying right and structuring it correctly, and that's where we come in, where, you know, we don't want to over-leverage, we don't want to get into debt financing that, you know, the interest is too high, where, you know, we can't debt service properly and meet our ratios. So there's, you know, that's more technical side of it. But whenever we're issuing an offering, whether it's a private offering or public offering for shares for one of these properties, we always keep our investors' best interests in mind. For us, our investors always come first.
Yeah, integrity is so important when it comes to business and finance, and I think that's probably why you've found yourself to be so successful in your endeavors. I know we're running low on time. If people want to connect with you, they want to learn more about your company and all the things that you're doing, where should they go? And any last words for the people watching the show? Yeah,
real quickly, they can find me on our website, kpi-capital.com, or any of my social media, Jorge Fajardo Official. And the last thing I'll just leave everyone with this is that, you know, the mind requires the evidence to change a limiting belief. And that's what we're here to provide, because once you see that, you begin to believe that not only is it possible, but that it's possible for you to be able to achieve and accomplish these things. So if you're looking to get into real estate, there's ways to do it. And, you know, I wanted to share this information, especially with the Latin community, because, you know, I found that, you know, there's a huge void in our community for someone providing this type of information. Yeah, I mean, Hispanics, I think, especially in the United States, they work hard and they're chasing the American dream, but a lot of them are sitting on cash because they don't have the financial education, and that's why it's super, super important for what you're doing and what we're all doing here. So, George, I want to thank you again for being on the show, my friend. Appreciate it. Thank you very much.